Yesterday morning, 9:30 a.m. New York City, a crowd of regular people, not hedge fund managers, not Wall Street suits, standing outside the Nasdaq building. And when that opening bell rang, you could hear the cheers from the street. Elon Musk stood at that podium and said, "I gave SpaceX a less than 10% chance of succeeding at all. If people had told me this was going to happen, I would have said, man, you must be smoking some really good crack." And then the stock opened. $150 a share, on a company priced at $135. By end of day, SpaceX closed at $160.95, up nearly 20%. And SpaceX became the most bought stock by retail investors that entire day, with buying running 3.5 times higher than Nvidia. Not even close. Your brother texted you. Your coworker asked at lunch. Your uncle who never talks about stocks suddenly has opinions. Everyone wants in. But here's what I need you to do right now. Take a breath. Because the question isn't whether SpaceX is incredible. It clearly is. The question is, at this price, after this hype, are you making a smart financial decision? Or are you caught in the most expensive FOMO moment in stock market history? I'm Mason. This is Mason Explains Wealth. Let's find out. First, what does SpaceX actually sell? Because most people think rockets. The reality is more complicated. SpaceX has 3 business segments right now: space launches, Starlink Internet, and artificial intelligence through xAI. The AI company Musk merged into SpaceX in February 2026. Here's where it gets interesting. Starlink generated $11.4 billion in revenue in 2025 with a 63% profit margin. It now has 10.3 million subscribers across 164 countries. It is the only profitable part of this entire company. The rocket business generated $4.1 billion in revenue, but posted an operating loss because Starship development alone burned through $3 billion. And xAI posted a $6.35 billion operating loss in 2025. A single segment, $6 billion in losses. Starlink's profits are literally subsidizing Grok's servers. Total picture. SpaceX did $18.7 billion in revenue in 2025, up 43% year over year. Impressive growth. But they still posted a $4.94 billion net loss on the bottom line, nearly $5 billion in losses, at a $1.77 trillion valuation. Does that make it a bad investment automatically? No. Amazon lost money for years. Netflix burned cash for years. But it does mean you are buying almost entirely on the promise of the future, not the present. And you need to understand that before you spend a single dollar. Now let me give you the reason smart money is genuinely excited about this. Start with the rockets. In 2025, SpaceX accounted for nearly 90% of all payload mass sent to Earth orbit, 167 successful launches. And the cost per kilogram on Falcon 9 has been driven down to under $1,500. The old industry standard was over $10,000 per kilogram. That's a 95% cost reduction. Boeing tried to compete. Failed. Russia tried. Out. Nobody on Earth can match this overnight. That is a real, durable moat. Starlink keeps accelerating. Already past 12 million subscribers. Growing 48% year over year. 63% operating margins. Those are software company margins on satellite hardware infrastructure. Genuinely rare. And here's the number that makes the bulls lose their minds. Goldman Sachs projects SpaceX revenue could hit $474 billion by 2030, up from $18.7 billion today, a 25-fold increase in 4 years. If Goldman is even half right, buying at $135 will look like buying Amazon in 2001, when everyone called Bezos crazy for selling books on the internet. And there's one more driver that has nothing to do with emotion. Forced institutional buying. At $1.77 trillion, SpaceX is now one of the 10 biggest listed companies on Earth. Every Nasdaq index fund, every passive ETF, they are legally obligated to buy SpaceX. Billions flowing in automatically. Not from hype, from rules. That structural demand is very real. Now here's the part that saves portfolios. Morningstar, one of the most respected independent research firms on Wall Street, published their SpaceX valuation before the IPO. Their fair value estimate, $63 per share. The stock is trading at $161. Morningstar says it's worth $63. That's not a rounding error. That's a completely different view of reality. Their reasoning is specific. SpaceX is trading at 94 times its 2025 revenue. For comparison, Meta went public at 22 times revenue. Amazon at 18 times. SpaceX at 94 times is the most expensive large-cap valuation in modern stock market history. Morningstar wrote that reaching this valuation requires, their exact words, flawless execution from a company currently posting nearly $5 billion in annual losses. And there's a detail buried in the official IPO filing that almost nobody is covering. Average revenue per Starlink user dropped from $99 per month in 2023 to $66 per month by Q1 2026. A 33% decline, because SpaceX is expanding into lower-income international markets with cheaper pricing. And the company itself says this trend will continue. They're adding subscribers, yes, but charging each one less. At some point that math becomes dangerous. Then there's XAI. Morningstar called it a material threat of value destruction, with an indeterminate competitive position against OpenAI and Anthropic. That's analyst language for, we genuinely don't know if this is worth anything yet. And you're paying for it anyway. Bottom line from the bears. Independent analysis shows SpaceX would need its earnings to grow 75 times from current levels by 2035 just to justify today's IPO price. 75 times. That's not a thesis. That's a prayer. So what do you actually do? Here's what I tell a close friend who called me yesterday asking whether to buy SpaceX at $161 before close. The company is real. The launch mode is real. Starlink is one of the most impressive recurring revenue businesses of the last decade. If you believe in space infrastructure, satellite internet, and AI over the next 15 years, SpaceX is a legitimate long-term story. But the price you pay always matters. Always. In every investment. At every moment in history. Right now you're looking at a stock up 19% on day one, with retail buying 3.5 times NVIDIA's rate, carrying a $5 billion net loss, priced at 94 times revenue, with a major research firm saying fair value is less than half of what you'd pay today. That combination, peak hype, peak price, maximum crowd excitement, is historically not where wealth gets built. It's where wealth gets transferred. From the emotional to the patient. From the reactive to the disciplined. The people who made generational money on Apple, Amazon, Google, most did not buy on IPO day. They bought in the quiet months. When the buzz died down and the actual business results started speaking. If SpaceX is truly what the bulls believe, and it might be, it will still be a great business in 12 months. The opportunity doesn't disappear just because you didn't buy on the most hyped day in stock market history. Yesterday was genuinely historic. A company that stayed private for 24 years, that built rockets from scratch, sent humans to space, connected the world with satellite internet, finally opened its doors to everyday investors. That's remarkable. That's worth appreciating. But the stock market doesn't reward enthusiasm. It rewards discipline. So before you click buy, know that only one of 3 segments is profitable. Know that 94 times revenue is historically extreme. Know that Morningstar's fair value is $63. And know that the most emotionally charged moment to buy a stock is almost never the smartest financial moment to buy it. Be excited about SpaceX. You're allowed to be. It's an extraordinary company. Just don't let the excitement write a check your portfolio can't cash. I'm Mason. This is Mason Explains Wealth. Share this with one person who was texting you about SpaceX yesterday. And drop a comment. Buying SpaceX, waiting for a pullback, or staying out. I read every single one. See you in the next one.